Low value investors. I often hear from investors, I'll wait until I break even. And on this topic, I wanted to elaborate. So let's say you've made an investment at $10 and the stock goes down to $3. And you often say, oh, I'll just wait until I break even to sell. I don't want to crystallize my loss. Now, that's not, in my opinion, the right way to think about it. Anytime that you're invested in the stock, it's the same as you buying the stock on that day, because the stock doesn't know at what price you bought it. It's not going to return to $10 just because you want it to return to $10. It'll return to $10 if it's worth $10. And secondly, I think that the best way to think about it is to try and estimate or value the business. Try to figure out what the business is worth. Maybe the business is only worth $3. Maybe the business is actually worth $1. And just because the stock still has not reached that $1, it doesn't mean it's worth free. So the best way to really think about it is not, I will just wait till I return to my entry point, because you might not return to your entry point. The best way to actually think about it is, if I was to sell my stock at $3, my capital, could it be best deployed into an opportunity that could appreciate over time? So, for example, let's say that you bought the stock and you think, you know what, I really kind of like the story, but I don't think that the stock today is worth X, Y, and Z. Maybe it will be worth X, Y, and Z in, let's say, 6 months or a year. Okay, that's like that's something that's worthwhile possibly waiting for. But if you think, oh, like I'm just waiting around for the sake of maybe one day it will return, that's just speculating. That's just hoping that someone else is going to come in and bid the price up. That's highly unlikely to happen. So I believe the best way to really do it is to just consider, what is my business actually worth? Another trick that I often do is that I just focus on the market cap, because what's what you're buying. You're buying the market cap, because often what companies do is that they dilute the shareholder a lot. So although your business is gone from, let's say, $10 to free, is because they diluted the number of shares significantly over that time, your business actually is much more expensive. So your market cap has actually risen significantly. So I really don't work off share price at all. In my mind, I always think, okay, let's say in my mind, a business like Netflix is worth, I don't know, I'm not checking, but let's say 140 billion, and I look at something like Nvidia is worth 140 billion. So I'm kind of thinking, like, in my mind, like, these 140 billion will buy me this type of business. Would I prefer to be invested in something like a monopoly, like Nvidia? Or would I prefer to be invested in a business that has never really generated any free cash flow, is highly competitive? So these are just kind of things I think about in my mind. Like, don't focus solely on the share price and I'll come back to break even. Think, if I sell out this business, my capital could be deployed elsewhere, and whether I would get a safer return elsewhere. So yeah, thank you for watching and subscribe.